Well, hello. And before we even start today, I just want to ask you something. And it's a question, sometimes it's uncomfortable. Today we're really talking about children and our children, our grandchildren. And you know what? If your child got sick tomorrow, not fatally, but just enough that it left a mark or something on their medical record. Sometimes it could be an illness, right? It could change anything in their health record. Will they still be able to get life insurance? Sometimes it's even our teenagers, our young adults. They're in high school, in college, right? They could be in their 18, 19, 20-year olds. We have to think about their insurability beyond today, right? And what that looked like if we wanted to cover them. Another thing I want you to think about tonight. And it's like the other side, like the average person is graduating in the United States with over $30,000 in debt before they even earn a first real paycheck. The average first-time home buyer is now 38 years old. So this conversation tonight is really talking about how the starting mark has changed for our children and for our next generation. And so I celebrate you. I know you're watching, either you're here with us on Zoom or you're on our YouTube page. And I just thank you for listening in, investing your time to learn more about the topic today of protecting what matters most, the next generation. So my name is Dr. Nana, and I am grateful to those that are here. If you know me, I'm a World Civility Ambassador. I have a background in nursing, education, entrepreneur, all things really to help. One of my main focuses has been working with young women, and I've served as a doula. I have just an extensive background, but of late and of the past year, I have become licensed in insurance. And I can tell you real quickly, two reasons why, for me, I even got into this industry. I'm someone that, again, loves helping people, right? Helping to empower people with the focus of girls and women. But a year ago, I lost two friends. I lost two friends, both with the diagnosis of cancer. And these guys, let me tell you, these were my good girlfriends. And please mind me tonight. I don't know why, technical difficulty. My laptop will not allow my camera to be captured. But I had lost two friends, and these were my good girlfriends. I don't know about you. If you got that good friend that you can go and have brunch with, you can shop with, you can cry with, they're gonna pray for you. If you down, they with you. If you happy, they riding with you. These were two of my good girlfriends, and they both passed with cancer. And so I walked through that stage of life with them, right? Seeing them have to say goodbye to their children, preparing their children. And it was devastating for me, and certainly for them and for their children and their grandchildren. But there were two different scenarios. One friend had insurance, not just insurance, but had insurance with living benefits. So what that means is even though she was nearing the end of her life, there was a level of peace. There was a level of knowing that there was a plan in place and there was not so much stress, right? Even though there was grieving and there was a loss, there was still a level of ease because they knew that financially things were taken care of. Not even that, the living benefits allowed my friend to have access, right, to the money earlier on. And that's why we consider that living benefits. So it was just a different experience, if you will. Then on the other side, I had a friend that did not have insurance at all. And only imagining the grief, the frustration, the fear, right? Even sometimes the anger, because financially they were not prepared, emotionally they were not prepared, and it just looked a lot different. right? And so burying two of my friends, two different scenarios, right? I want to say like not even a month later is when I got licensed and I became a licensed insurance broker. So I do this for my two good girlfriends. I do this to make sure that there is no one that comes in my sphere of influence that I cannot do all that I can to help them, prepare them, and educate them, and all while empowering them to protect themselves and their families for, listen, a situation and a scenario that we know is going to always happen. So tonight, my focus is really on the next generation. Thank you if you was on our last webinar 2 weeks ago, where we really focused on women and women being the breadwinners, women, being the caregivers, all the things. But today I wanted us to talk about your children's future, and how we can start today with protecting them and building wealth, guys. We can do this. All right. So let me just tell you, I think I've shared a little bit about myself. um, and what we're going to cover tonight is we're going to talk about the financial reality, which is what I opened up with. I'll give you some statistics. I'll let you know a lot of what's happening with our young people today and what the landscape looks for them as they grow older. So financial reality, right? What our kids are inheriting. Let's not even think about the stress of the political environment, the environment, just the science, the climate change, all the things that are going on around our children, and they're growing up in that. But we know that in our own families, right, there's a level of stress even for our children. And so we can do something about that. We can do something about that. Knowing also is why insuring young changes everything. And I mean that. Being able to insure your children is an advantage that they'll have years down the line. Sometimes when we're no longer even here because of what we put in place for them today. I also talk to you about whole life. IULs, right? We're going to talk about whole life, permanent life insurance. These are some of the plans and the policies that are important when we're talking about children and insuring our children. They are two powerful tools. And always, I want you to know that life insurance is a tool. It's not an investment strategy, but it's a tool for you to build, right, the legacy that you want and you need for your family. Lastly, we're going to talk about from policy to real life and how knowing putting a policy in place now can help to make sure or ensure or help just the foundation of buying a home later. College degree, trade degree, right? Trade certificate, and even for our entrepreneurs, right? If you were one of those that wanted to start a business, but where do you get that money from? And these are all real cases, real scenarios, and this is what we're going to cover tonight. All right. So hopefully you have a pen and paper. Please put in the chat if you have any questions as I go through this. I would love to answer those questions when we are finished. One thing I would say is that the starting line has changed. I'm not sure what age group you are, if you were born in the 60s, the 70s, the 80s, the 90s, right? But the starting line has moved drastically. And as I said, right now, college students are graduating, and this is really very conservative, $30,000 in debt. The student loan debt now exceeds 1.8 trillion, not billion, not million, but trillion dollars. And the average first time home buyer is 38 years old. Now, I know for me, it was definitely younger. I think I bought my first property. I was 32. Yes, 32. And I want to know, I can hear like my mom and my uncle when they were like actually in their 20s, right? Vietnam vets coming back and buying homes and things like that. So we know that even the range of people are actually, our young people are buying homes older. And the last thing is that when we think about the percentage of putting a down payment, right? Typically it was like $8,000 to $10,000. That's more than tripled. The average down payment needed right now is $36,000. So what that means is that's another barrier for our young people, for our future, our children and our grandchildren to be able to have and own a home. And for now, it's going to probably get worse, right? So $36,000. So our kids are starting back further than we did. And this is exactly why starting early matters more than ever. I'll say that again. Starting early matters more now than ever. This is an important part when we talk about insurability. The healthiest moment to insure is when it's today. And that's for you and your children. Because tomorrow nobody knows. So why insure a healthy child? Like sometimes people think that, like, why would I put insurance on my children? Is that like a death wish? Is that like I'm thinking something bad is going to happen to them? Absolutely not. That's actually the legacy. That's the wisdom of foresight to say, you know what? It's important now for me to cover my healthy children and grandchildren because your child will never be more insurable than they are right now. Every birthday passes is an opportunity that doesn't come back. Every application, every quote I put in, it's based upon a main thing, and that's that date of birth. That's that birthday. So locking in coverage, right? When there is no diagnosis, locking in coverage when their height and their weight is optimal. These things matter. And sometimes we don't think about it. I myself, we did some children's whole life younger when our children were younger. But then also as they got older, the more I learned about the industry, right? But then, you know what? Some of my boys were a little overweight. So their weight was like, at the maximum. And that affects the premium. Another thing, if they begin to smoke weed and marijuana, that affects the premium. If they have any motor vehicle issues or incidents, that affects the premium. All of these things play a role. And that's why it's important to lock in coverage today when it does matter and it's that they are the healthiest. So that way, no matter what life brings, it's already taken care of. So health is the most valuable asset your child has right now. And the insurance honors that. They see that and they recognize that. And that's a huge benefit when we talk about life insurance, right? And how that affects us insuring our children and grandchildren. And again, the insurability lock in is your advantage. The lowest premiums are right now for just dollars a week. Not even a cup of coffee a week right now. I went to Starbucks, y'all. I got an iced matcha. Oh my goodness, it was $8.98. My mom, who's 83, she looked at me like, what? A cup of coffee costs $8? I don't know about you, but I just felt like I needed a treat. Trust me, I don't do it every day. I don't do it every week, but I just felt like I needed a treat that day. But just imagine that. You can insure a child, right? Just for a few dollars a week. Sometimes 15 to less than $20 a month can be the premium if you lock it in now. The other thing is coverage cannot be canceled. You hold up your end of the bargain and you make sure that premium gets paid. The insurer cannot cancel that coverage due to any health challenges, any criminal challenges, any DMV driving issues. The policy is in place. You pay the premium, they'll hold up the policy and keep the coverage in place no matter what. Lastly, my one of my favorite is that it grows more valuable over time. And this is something that I know that I didn't quite understand. This is something that I know a lot of people in our community, right, does not know and didn't understand that there is a cash value. This one financial decision that you make to cover your children or grandchildren or those that you are guardian over, this is more valuable and it will grow in value over time. I'll say that again. The cash value will grow over time. So these are the reasons why locking in insurance and covering your children is so important. Talking about whole life, if you're familiar with whole life, you'll hear whole life term, permanent life insurance, right? These are just terms I know sometimes we just throw out there, but I want to make sure you understand what this means. Again, because this is not just for children, right? So whole life insurance is a guaranteed foundation, talking about building a legacy, building financial wealth and awareness, right? Here's how it works. You cover your child for life. It builds cash value. This is guaranteed. And it's a contractual schedule. So there's a certain percentage that the cash value will increase every year, regardless of what happens in the market. Then your premium is fixed. So whatever that 15, that 19, that 18.99 that the premium is now, it will never change. They are set and they never increase ever. So what you pay today is what you'll pay 20 years from now. It's what even the child or the grandchild can continue to pay when we're no longer here. That is the rate. And then there's a dividend potential. So some participating policies pay dividends on top of the guaranteed cash value. That's what I like. That's what so often we don't know, and we are not participating in that. Please put any questions as I'm talking, right? Anything that comes up. So, why whole life for families, right? And again, whole life can be even for you. It can be for you. It could be for at any age, whole life applies, okay? But whole life isn't complicated. It's pretty simple, right? It's a superpower. That's what is good about it. It's very simple. They agree on a price that you pay every month, whatever your premium is, and that's set up. So when life gets uncertain, the policy is the one thing that never wavers. We know when the prices of gas goes up, your premium will not, right? Your premium will stay the same. It never wavers. There's no market risk, there's no surprises, and the guaranteed cash value will grow over year after year. It's simple and it's predictable. Here's the premium, here's your coverage. Never changes, right? And this is the guarantee. That's what I can appreciate. That's how whole life is simple. What term is a bit different. Term is for a certain set of time, right? And sometimes term rates can vary. But whole life, this is why it works. This is why a lot of people do consider the advantage of whole life, right? It's a foundation for your family and they can count on it no matter what. We have a whole life policy, it stays in place. Next, I want to talk to you about an IUL or a universal life policy. This is linked, it's like with the market. It matches the market index, something like the S&P 500, if you've heard of that, right? So this is permanent coverage. So you have the permanent coverage. It could be 50,000, 80,000, 100,000, 200,000, 300,000, right? Whatever the face value is, that is permanent coverage. But there also has a cash value that is credited, and that is based upon the market index. And the growth potential is even more, right? But it has no direct market exposure. Now, the good thing about this that I would say is that there's a cap and there's a floor. So unlike the stock market, that it can literally bottom out and you can lose everything, that can never happen with a universal life policy because there's a minimum, which is typically 2 to 2.5%. And the cap is 8 to 12%, depending on the policy and the carrier. Okay, so that cash value will never drop below and it will never go higher than that. So you have a cap and a floor. And this also is a tax advantage where the growth tax is deferred and the policy loans are typically tax free. This is what really matters because this is compounding year after year after year that this grows, still keeping the permanent coverage and the life insurance. That is impressive. And that is something that a lot of us don't know about and really should take advantage of. Okay. And typically, our universal life policies, they also include living benefits. And if you're not familiar with living benefits, then that's definitely something we could talk about in our one-on-one. I'd certainly want you to reach out to me so we can schedule that. And you go to blessedlegacygroup.com and you just schedule your legacy call with me, and I can make sure you understand what living benefits are. Okay. And that goes to me talking to you about my two good girlfriends, one that even had living benefits. So what happens with that is the policy actually paid out while she was on hospice. So she was able to pay off cars. She was able to remodel her home, right? Pay off debt. She was able to do that because the money was accessible to her. She was able to pay her sister, right, for being there for her, right? Everything she wanted, she needed, it was there and it was available. So there was no financial strain. And that's a living benefit. So even if you have insurance and you're not sure about the living benefit, I definitely need you to connect with me, okay? Let's just look at the differences between whole life versus universal life and what fits your family, right? They both have cash value, correct? So cash value is always there, but on top of that, the UL actually has an additional amount that matches and grows and flows, matching the S&P 500 or the Barclays. It depends on how we actually structure it for you. The premiums do not change in a whole life policy. They're fixed. So again, if it's $20 a month, it'll be $20 a month forever. The UL or IUL has flexible limits. And the same way you have a max and a floor, they actually give you three payment options. So let's just say the lowest premium amount might be $30. Then the next level could be 50, and then the next level might be 60 or 70. But what those varying amounts do is they allow you to have more money to go toward cash value, and it allows the cash value to increase faster. Hope that makes sense. Okay. So that's really the difference, right? There's fixed amount, $20 a month for whole life, never changes. The UL has different ranges for you. So if financially you're doing really well and you want to be able to pay extra, right, to grow that cash value, you can. You can't do that with a whole life. So there's some ranges there, some flexibility in the premiums. Okay, so I hope that makes sense. Again, any questions, please type in the chat as you're watching live. Make sure you put that in the chat. Market risk, right? And so you see here, there's no market risk with the cash value for a whole life, but there is a floor and a cap with a UL. The growth potential, right, is there for both. The whole life, it has moderate, yet it is guaranteed. And the UL has a higher potential because you have that range, right? From 80 to 12%, 8 to 12%, you have that range. So it's a bit higher of potential for cash value. And which one is best? It really is something that we can work out together. We have to find out, right? The age, the health. Some ULs, you have to, all of the policies, they have to get approved for. Right. So we will look at that. And so let's let you know. So I'm actually a broker. So I'm not tied or committed to any one carrier. So I can look out the whole landscape and see what will be the best fit. Right. So I have access to 30 different carriers. So that gives us a lot of room to look and see what's the best fit for you, what's the best application, the best price point. So that gives me a bit of a benefit for my clients. So many families use both, and I'm one of them, right? Once I became a broker and I started learning more about it, initially I only had whole life for my children. But when I learned about ULs, right? Then I have two whole life policies on my sons, and I have a UL on each of them. Right. So there's no answer, but it's just that there's no right answer, but there's definitely, let's start with something and then we'll work at what's best for you, right? And for your time and what your plans are. This is what we started out in the beginning. Like, why does this matter? Right? Understanding that, listen, $36,000 is the starting now for a down payment for a house. Right. And we know that when we talk about wealth building in America, right, a lot of it is tied to what? To real estate. So being able to buy a home, even if, even like I said, listen, if no one left me anything, I want to be one of the ones that can leave something for someone else. you know? So just thinking about that. The other thing is college education, looking at $30,000 worth of debt, student loans, they need that amount right away. That's the first, that's what it is, right? We know that the bill has got to be paid for the kids to take the first class. And then lastly is that seed money. It could even be for a wedding. It could be, you know what, they have a dream, right? They want to travel, they want to start a business. It's just so incredible to say, you know what, mom thought about the future. Grandma thought about the future. There is something here that we could pull from and I can use to get started. What would that look like if we had it? I say that all the time. Listen, right? If my mom, if my grandma, if they had something in place when I graduated high school, when I was in college, that it just gave me that advantage to start. And that's when we talk about generational wealth and building and changing trajectory of our future, of our children. We can do this. And this is one tool that can help you to do that. And I love this because even if it's the loan or taken out, this has nothing to do with credit. They don't have to have a good credit score. This is just it put in place. Listen, this is what we've been paying towards. The cash value is there. There's no questions asked. They cut a check or they deposit the money into your account. Very, very powerful. And now, when we think about time, why do it now? You could start as young as 2 months old. Right? And then we consider as even 25, 26, right? But if you can start now, I don't know how old your children are, your grandchildren are, right? But listen, the monthly contribution starts whatever age it is. There's a big difference on cash accumulation over time. The time is what matters. This is the biggest factor that you and I can't get back, but this is something that we can give and have the benefit when it comes to our children. It's how many years that we give it to grow. You don't need to inherit generational wealth to start one. I'll say that again. You may not have inherited generational wealth. No one might have left you 10, 20, 30, 40, $50,000, but you know what? We can be the ones who can start it. And you need to be the one that can start it for the next generation. Just one decision, one contribution every month. For me, it was a Starbucks coffee. It was a Starbucks matcha. Don't take much. It don't take much. So here's what I say. Next steps for us is this, right? I have a financial wellness check. Some of you may have already received that. It's just a quick quiz that you can take just to analyze where you are personally as far as your legacy, your policies. I love to do policy reviews. They're really, really important because a lot of times we have coverage, but we don't really know what we have. Right. And so it's always important to review your policy every year. Update your beneficiaries. You know how many policies never go unclaimed? Review your beneficiaries. A complimentary thing that I do as a broker is that I want to make sure that your beneficiaries know who you are and who I am, not who you are, duh. But you get what I'm saying. I want them to know that if anything happens, I'm the one that you call. I will call the insurance company with the beneficiary, walk them through the steps, help them answer the questions, and make sure that they are paid ASAP. So I want you to book your legacy building call. This is free. There is no obligation to buy. I hope you understand that. I do not, there's no pressure here. Um, I want you just to get the education that you need to order to just get the right things in place. If you have something in place now and it's a good fit, I'll let you know that. You keep what you got. But I can certainly help you to get some things in place for your children and for the next generation. But again, no obligation. It's just getting the facts. I can compare the rates with various, at least you try to get like two or three different carriers. If it's a fit, get you approved and make sure we get that in place. But this is not a generic plan because a lot of times you call, you have an insurance broker, you have an insurance agent, they sell one thing. That's all they can offer you. There's a difference. Agent and a broker. No, I just get your landscape and then I can find out what's the best fit for you. And lastly, I would love to know if you could share just one thing that you wish someone had set up for you when you was 25. For me, a $20,000 when I graduated high school, oh my goodness, what a difference that would have made. I remember applying for colleges. All they told me was just to good grades and get in college. Then when it was time for me to go to college, it was like, now what? There was nothing there. I'll never forget that. Right? It was like, okay, now what? Oh, we got to get financial aid. You had to do loans. You had to do whatever. But I'm grateful that, you know what? I could change that. And so can you. So I want you to drop that answer in the chat. If you have any questions for me, please feel free to put them in the chat for me. I will be happy to answer that. You can go to the website. You just click on Legacy Free Legacy Call. And then also I will give you my email so you can send me an email. It's Blessed Legacy Group at gmail.com. All right. So I hope either the website, and so you could fill out the legacy the call um form, intake form, and you can actually get right on my schedule that way. Or I can reach back out to you. Just fill out the form and I can reach back out to you. So if there's no times that fit your schedule, then please feel free. I will send, let me give you my cell and you could text me as well. I'm good on text too. But I just want to thank you. I try to keep these at 30 minutes. I just try to give the information, make sure that you have exactly what it is that you need. And I hope that tonight was informative for you. I hope that it gave you some insight. But more importantly, I hope that you will take some steps next to help secure the future, to position and plan for the next generation. My name is Dr. Nan, and I'm grateful for your time and the connection. And I look forward to helping you as you continue to grow and build your legacy in the future. Thank you so much and have a great day. Good night.